FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is June 5th, 2017. First 5 months of the year are gone. Trump has been president for, oh my goodness, it'll be 5 months on the 20th of this month. And what has changed? What stayed the same? Market fluctuations, gyrations. Where do you put your money? Well, our good friend from MoneyballeEconomics.com, Andrew Zatlin's with us. Oh, and one other thing before we get into it. Emails. Email us at kl@kerrylutz.com. Andrew, welcome back.
Always a pleasure. Hi, everyone. Good morning, good afternoon, whatever time it is.
Hey, so what's doing with the economy here? I hear like mixed signals, Andrew. On the one hand, unemployment claims are down to very low levels. On the other hand, GDP looks like it's struggling. Auto sales seem to be tanking. I don't know what to make of housing. What's your take here?
You know, we've gotten a lot of macro signals over the last week that confirm sort of my worldview, and maybe I could keep it starting at the 30,000 foot level. And we can drill down into the various data points that are coming out that are confirming where we are, and then talk about, what are some data points that are going to come out that will tell us where to go next. Fundamentally, we had a bunch of things happen in the second half that boosted the global economy and boosted the U.S. and gave us that mirage of growth, that booming growth. You might have heard some things, reflation, Trumpflation. There were all these things happening, a lot of activity, but these were waves. And the nature of a wave is it ebbs and flows. We're at the end of that ebbing and flowing cycle. And at the heart of it, though, was one important wave, and that was I call it the destocking, restocking wave. This time last year, the first part of the year, companies were just running around trying to cut costs. They were cutting inventory. If you recall, employment was terrible in the first half of the year. The inventory of people and things was being pulled back. So that was the destocking part. As we get into the second half, kind of like a drunk zigzagging on the highway, they went too far one way and they had to go in the other direction. So they suddenly restocked. We got too thin on our inventories and our stockpiles. So all of a sudden, companies then started restocking. That doesn't take a long time. So that was sort of the nature of the fourth quarter and coming into the first quarter. In the first quarter, you had that other thing, this love affair, the honeymoon with Trump. He was going to come in, Big Daddy was going to drop money everywhere. It was like Uncle Scrooge McDuck was coming in town and he was going to build dams, bridges, and do all these wonderful things. Well, the timing of this is really important, Kerry, because the nature of a company, of a business is hibernation. You hibernate and you come out of hibernation, say January, February time period, and you look around and you start getting in touch again with your clients. What is their worldview? What are they going to be buying this year? What's their budget? So by the end of the first quarter, you've got this window that opens of activity. That is when you're pretty much going to start your hiring. That's pretty much when you're going to start buying your equipment. Whatever it is you need, your investment pretty much kicks off around March and it goes through the summer. By the time September rolls around, you're winding down. That's the window. And that's the window that Trump was dealing with. And unfortunately, this excitement, this Trumpflation, as we got to March, kind of peaked. And I think you see that pretty much in the stock market. It kind of peaked in February and then all of a sudden started to slow down again, primarily because these initiatives that Trump put on the table were not really translating. And you had the ACA, the Obamacare repeal, that failed. That was a big failure. From the standpoint of sharks smelled blood in the water, all of a sudden you could push back on this Trump mandate anywhere. And that's kind of what we've seen. We've also seen the Democratic Party effectively use their strategy of distraction. I mean, look at all the things they're doing. Russia. They're going after everybody, not because there's any meat there. I mean, I don't think the Democrats really believe that this is going to yield any fruit, but it's heavily distracting to the Trump administration. It keeps him from moving his initiatives forward. And that's what we're now seeing. We get to the second quarter. Businesses need to start. They've got that window. They need to start investing. And what they realized by May was that Trump initiatives were not going to have any traction whatsoever in 2017. And let's face it, in early May, he still hadn't even put forth a tax plan. So what that means is at the 30,000 foot level, you have a real economic demand that's starting to, we finished right sizing and realigning inventories to actual demand. Demand is there, But you now have to the honeymoon's over with Trump in the sense of what he can and can't accomplish. 2017 is written off in terms of this Keynesian money coming from the government, public spending on stuff. And so it's back to basics of GDP about 2%, mild, very mild growth. Now Kerry, that's a good thing. Again, go back to this time last year and people were talking recession. I was talking recession because businesses were talking recessions. They were pulling back. So we've shifted trajectory into a more positive place. Sort of the finger's been taken off that button, but it's not this up and to the right, things are great. It's things are good. We're shifting from layoffs potentially to no layoffs and, steady as you go. And there's really no tail. There's nothing driving us forward per se. In fact, there are probably some headwinds out there. The auto sector's the big headwind I think we've got to get through going forward. Retail, another big headwind. And those are out there. That's going to be a drag on the economy, especially autos, by the way. And so as we adjust, as expectations get lowered, not to a negative place, but away from this fantastic, optimistic, bullish place, you listen to the earnings calls, and this is pretty much what the CEOs are saying on their earnings calls, which is everyone's optimistic. We like the rhetoric, but it hasn't really translated into anything definitive. And so we've got to hire and we've got to invest based on what we're seeing, not on the potential downstream stuff. And again, that's more moderate than I think people were hoping for. And so I think the second half is at risk. And so we're starting to see those macro data points kind of confirm this. I don't want to call it rolling over because rolling over sounds dire and dramatic, but call it, we kind of peaked and now we're kind of pulling back a little bit from that peak. Still good, just maybe not as good as people were hoping for.
Mm-hmm. Well, I would say reports of Donald Trump's failure as president are greatly exaggerated and premature. I don't know what he'll eventually get through. That's anybody's guess. But this isn't a guy who just quits because some people in Congress say no. And, he spent the better part of the early part of his term just getting a handle on stuff because, the country is a mess. The government is a mess for sure. And hey, look, you got he said approved Keystone. The Dakota Access Pipeline is going to start. I think it started pumping a couple days ago, Andrew. I mean, just the elimination of regulation and the retardation in its purest form of the word retard, meaning slow down or stop of all regulation, psychologically has definitely helped the economy move forward, don't you think?
I want to be very clear, Kerry. I'm not criticizing Trump. I'm not criticizing his performance at all.
Not to say you were.
But for the audience, I want everyone to know. I'm not. Sure. Hey, you know what? I like the potential. I like the disruptive potential. I like what is possible. I love the possibilities. I'm simply pointing out, if you're a business person, it's June. You still don't have a tax plan with detail that tells you what you should and shouldn't be doing. That it's too late in the year. You got to look beyond that. And unfortunately, that's what we're talking about is what's the here and now versus the potential. So I think unfortunately or fortunately, we got, and I don't think this is unusual for any new administration. I think this is probably fairly typical. You're getting your sea legs under you, working through the beltway politics to actually get your initiatives. I mean, let's go back to Obama. I'm sorry if that put a bad taste in people's mouths, but let's go back to Obama's first year. It took him over a year. He had this huge healthcare mandate that he wanted to put in place. It was fits and starts in over a year before that was actually on the table being looked at. And so I think we're in the same period. I just think that there was a lot of this, waiting in the wings, Republican Party, 8 years, they're in charge. There's this huge control of Congress, state level control, a wide and broad and deep capability to enact legislation. So I think there was a lot of hope. And unfortunately, politics enters the scene. And so I think, again, Trump is going to have a fight. I think if I were to criticize him, I would say he's just too easily distracted and was doing too many things at once. Remember, it was silly. Remember, we had that first 100 days. There was this big focus. What has he done in the first 100 days? Guy couldn't catch a break on anything. No matter what he did, Harvard did a study that said 80% of the reporting on the poor guy was negative. Compared to 50% for prior administrations. There has been just, this ongoing, beat the gong. This guy's, a dud. Nothing. It doesn't matter what he's done or hasn't done, right? Yeah. I just am saying from a business perspective, from an investing perspective, there was a disconnect between hope and reality. The hope for change still possible. Trump still moving forward on things. possibly distracted on a bunch of other things. The Democrats are doing him no favors with that distraction. I think they have him down. If you can keep him tweeting at 3 a.m, that means he's not doing something else at 3 a.m. And I think they see that. That's their only hope and prayer, is to keep the guy busy on stuff that doesn't really matter. And unfortunately, Donald Trump is a fighter, and you can poke at him only so long before he starts to poke back, and that's the Democratic strategy, in my opinion. So from a business standpoint, he didn't bring presents. Uncle came to town and he talked about a lot of things, but there's been no doling out of money, and so businesses are back to what should we do? So that's where the interesting investment opportunities are.
Yeah.
The S&P has flowed up as everyone got excited and the Fed banks threw money and, they're doing what they're going to do. It's very important to notice that the Fed has raised rates twice now and the markets have shrugged it off. Now, granted, it's a small, but they've shrugged it off.
Yeah.
And that's very interesting. Historically, we've never seen that. And considering, you've got a low level of growth, pick your number, 2%, 3%. Yeah, it's low. But all of a sudden, you've added 50 basis points of interest rate on top of that. You don't have inflation right now, so that's why the pain isn't there. But you start saying, well, now we're talking about this month, another 0.25%. Wow, they're throwing it out there, and the markets are shrugging it off. We're in uncharted territory. This is what I think is interesting, Kerry, about investment opportunities. May I bend your ear on my view here?
Yeah, sure.
Okay, so a lot of people would say the market's disconnected from fundamentals. There are tons of charts out there that show, economic growth kind of flat, moving sideways, and you've got the S&P and you're raging going up. I have seen the best work done at this time taking one more step in looking at that analysis. And what you got to do is not look at the market as this homogenous beast. You have to look at it from the perspective of there's the market, and then there are 10 stocks that are driving almost 100% of the market's growth, stock price growth. And those are what they call the FANGs, the Facebooks, Apples, Netflix, Googles, and there's even an extension that the FANGs, throw Amazon in there and Adobe and a couple of others. Bottom line, the market is behaving rationally if you take the following perspective. If you say, let's get rid of these high growth stocks and look at the other 99.99999% of the stocks out there, the market is definitely looking at the fundamental performance of each and every stock. So I throw out the following in my investment approach. When I look at these FANG stocks, what I see is they're not going up because of fundamentals. They're going up because if you are the Kingdom of Saudi Arabia, if you are Singapore's sovereign bank, if you are the sovereign bank of Norway, you're shoving tens of billions of dollars into the U.S. market, and you're a big whale, and you need deep waters to swim in. So the money has to flow only to these $500 billion valuation companies in order for you to invest and be liquid and not be seen what you're doing. Same thing with hedge funds that have tens and hundreds of billions of dollars to throw into the equity markets. They have to put it into Apple. Let's take a step back here. Apple has not only peaked, they're slowing down. Their performance is actually going down. The only reason this latest quarter was good is they had the benefit of one extra day of sales. Doesn't sound like much, but when you're Apple, that one extra day is, I don't know, what is that, $1 billion of sales? It's huge, right? Bottom line, their cell phone growth is stunning. Everything they're doing is slowing down, but the stock keeps going up. That tells you that those stocks are disconnected from reality, the FANG stocks. So you focus on the others. I mean, I would not fight the FANG stocks because ultimately that's where the big players at the poker table are playing. You don't have the stakes. I don't have the stakes to play in that game. And you don't fight these guys because they're the only ones who know who the sucker at the table is, and it's you and me. But these other stocks are behaving rationally. And so what I do is I look at who is stepping on that operational gas pedal, who is bulking up and who isn't. Let's use an example last week, Michael Kors. Michael Kors was one that I called out as having, they're in sheer defensive mode. And sure enough, they crashed and burned. And you could look at that very easily. They've been on a declining revenue path for some time. They did not have a turnaround story. And the data that I collect says operationally, they're basically almost to a point where they're having to charge their employees to park in the parking lot, kind of a situation. They're struggling. So when a company, coming out of the corporate world as I do, and this is important, I do not come from Wall Street. I come from the corporate world. I come from Main Street. I come from an operational standpoint. I know exactly what a CFO is doing when they're in panic mode. I know exactly where they're cutting because you can get by for 3 to 6 months trimming some spending. Interesting data point. If you look at Las Vegas meetings, Las Vegas is the mecca for business meetings. Year to date, Las Vegas business meetings, the number of meetings are down almost 20% compared to last year. That's important for two things. Last year was not exactly a stellar year for the U.S. economy in the first half. Companies were pulling back. So even compared to a weak period, you have companies saying, you know what, let's not go to Vegas to have our boondoggle meeting. As much as that would be a great morale booster, let's maybe stay home, maybe have a paintball contest or something. That's the state of affairs with businesses today. They're still trimming. And what I do is I look for the companies who are trimming the most, because that's not a good sign. And then I look for the companies that are doing the opposite, that are on, this massive spending streak. And that's where you put your money down. And the other is where you buy puts and calls, or you just make sure your portfolio is not too exposed to companies, like in the retail sector. It's a little late for the retail sector, but aerospace and defense, no, wow. You could still make money there because we haven't even seen them starting to sell that $100 billion of goodies to Saudi Arabia. And then there's going to be the secondary wave of Israel's going to raise their hand and say, wait a second, can you top us off a little bit? And then you're going to have Vietnam versus China. Vietnam saying, hey, maybe we could buy another few billion. And Japan, the same thing. And Trump is out there pushing NATO. You guys need to spend tens of billions of dollars more. And guess what? You want to buy our stuff. So this is a massive period for that sector. And we're seeing that in their OPEX spending. They're stepping on the gas, not the brakes.
All right. Well, it sounds like the future is a little uncertain here. It sounds like more of the same. I guess a trend in motion stays in motion until it stops. So we're just going to have to see what happens. I think Trump's agenda, large parts of it will wind up going through, because I think the purpose of a politician is to get himself reelected. That's why he lives. Forget about everything else. And once they start to perceive that not passing his agenda, the Republicans will be their passport to defeat, they will start getting serious about implementing them. But like you said, 2017's gone already, so we could probably look forward to it towards the end of the year at the earliest. But they're out to defeat him. However, once they realize that his interests have become their interests, I think you'll see a major turnabout. Anyway, Andrew, where's the best place to find you?
Always come to Moneyball Economics if you want a free weekly update of what we're thinking. And we've got the Moneyball Trader if you want to take a look at our investment choices, ideas, I should say.
All right. Hey, and if you got any questions, comments, email kl@kerrylutz.com. The Twitter feed's @KerryLutz. Facebook page is Financial Survival Network. Andrew, we will talk to you again real soon. Be well.
Thanks, and take care. Happy investing, everyone.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.